Can you make money as a scalper? Can you really be profitable as someone who scalps the market? The better question is it necessary? And why do scalpers scalp in general? What is the main reason why your average person thinks about wanting to scalp or has the desire to scalp the market? 95% of the time, it is greed driven. There is no other reason as to why else you would be doing it. So my question is for you is it necessary? Do you think that you'll be able to scalp the market for decades and decades to come? It might be convenient for you right now. You might find a small percentage of people that are consistently doing it, but lower timeframes isn't always the answer. It isn't always necessary. That's like saying the more time that you have in front of the charts, the more likely that you'll be successful, or the more trades that you'll take will correlate to more profitability. You know that's not the case. If you're into the lower timeframes for precision or tighter entries, there's probably some truth within that. There's more accuracy, but is it standing in the way of you being profitable or not? Well, statistically proven, they've already shown that people that scalp the market, you're more likely to lose than to win. People that use higher timeframes, this is already true in prop firm data. This is not my opinion, this is just the stats. You're more likely to be profitable when you hold trades for over 4 to 6 hours. Most of the time, people that are scalping the market, that are in and out, do not fall into that category. So you have to look at the data points and understand, right, what is necessary and when should I do it? So I want to show you on the charts now how and why I trade the way that I do, where you should scalp and where you shouldn't. And then hopefully by the end of the video, you will have more of a broader understanding as to, rather than putting yourself into this bracket, because I would say top 3 questions is, what is the Falcon system? What is the Falcon strategy? Is it scalping? Is it swing trading? There seems to be a whole bunch of confusion. So I'm going to clear things up for you. To me, it's situational. There's a time and a place when you should be in and out of the market. And there's obviously a time and a place when you should hold trades for longer. I'll give you a very brief example that sums this up. Let's say euro dollar. So euro dollar here on the daily, this run was famous for Falcon mechanics. We covered this in extensive detail. So if we look at positioning on euro dollar and we just assess this run as a whole, would I want to scalp the market up here? Or would I want to scalp the market from here to here? Or would I want to scalp the market in this section? It's very, very simple. If I'm going to be giving myself the best opportunity to maximize a profitable leg, an impulsive run, well then I want to take a higher time frame position and look at from point A to point B being here. If I want to capitalize on this run, I don't want to be scalping up here because then I'm capping the opportunity. So I am not for or against, which is why I always say the Falcon system isn't a scalping system. Can you scalp the Falcon system? 100%. If you're proficient and you know what you're doing, this is what I love about the way that we trade, because the deeper the layers to the system itself and the better you become, it's then situational to you. So I'll explain this in more detail. So let's say, for example, I'm looking at this run. I'm more likely to swing a position here, and then I may add into positions, I may scale into moves, but in terms of being in and out of the market, that's going to be more of a positional play. So let's talk about this area and this area. So you've got this low to the left and this low here. I am more likely, when I go into the lower time frame, so if I mark this on here, I am more likely on the 1 hour time frame, let's say I'm looking for an entry. If I find an entry here, let's say I'm in with 10 pip stop. If I'm going to scalp the market here, would this make sense for me to be in and out towards that low? Yes. Why? Because of the positioning. Why would I want to swing a move there, where if I go to the 4 hour and you can see the base, why would I want to swing a move here when I'm at the last phase? I'm quite far into the run in relation to where a lot of volume previously presides. So I'm going to use that as situational, and then any breaks below that structure, if we hold and then I have further confirmation of entries and I took, let's say, another entry that was underneath, well then guess what? Same thing applies. Would I want to swing the position and then zoom out and think, right, I'm going to hold this move all the way to these lows? No, I wouldn't, because that wouldn't make sense, because I've already established a run as to where we reside. This is the major low. So I'm going to treat it very different as to where I'm at. And that's why I've never been a fan. I don't think I've ever explained this. This is why I've never been a fan of capping myself in that scenario, because yes, this makes sense. In and out, maybe a 6-1 there, 11-1 there, 4-1, whatever it is, that makes sense for the situation itself. But if I'm going to take a higher time frame move, let's say I go to the daily and I'm looking for a swing style move. This technically, I won't go into too much detail, but this technically is a swing move, and then slightly larger stop, so call it 70 odd. If I was to look at this as a longer term swing, I'd be holding it for the long term. That would be a 9.5% move. There are more strategic ways to get into, to basically benefit from a high time frame swing, but using the 4 hour. So it's almost daily confirmation and then 4 hour advanced level of swing. So then what I would do on the 4 hour is I would get in and I would adjust my stop accordingly to the particular structure. So for example, my entry in this scenario would be below that wick on the break, and then I would be able to tighten up my stop to probably, I would say 60 in this scenario would be the tightest, but let's call it 60 for now. And then we look at the same run. So instead of 9.5-ish, it's now 11. Sometimes it's going to be way more of an impact than that. It's not a huge move, but you see how this becomes almost a base for my moves, and then I can strategically get involved in them. So let's say, for example, I'm looking at a entry higher up here and I'm already in the long-term swing. What can I do? I can add to the position. I may scale in. So you have the first move, which was this sell-off towards that low. But let's look at the next one, because this one's a bit more straightforward. This one's more complex. So you see how the market leaves this hook here. We create all of the gaps. We near miss those gaps multiple times. We eventually take it out. Let's say I'm looking for an entry in here, and I'm on a funded account. Maybe some of you're trading funded capital. You may have your longer term move in place, and then you might be looking at this. We use mechanical management in a scenario like that. I'll take that low to that high. Let's have a look. That equals that low, so 6-1. So let's say you're looking at this. Even in this area, it's a bit questionable to be looking at it for a scalp, purely because I'm still positioned all the way up here and I'm playing this move, which is a high time frame run. However, this is where it becomes situational. If you're running, if let's say you've already got 4 or 5% banked and your profit target to get a 100k account or a 200k account is 10%, and playing this range here is a 6-1. Do I think it's a wise idea to hold this for days and days and days, if not weeks? No, I don't think so. This would make sense because it's situational to you to apply, in my opinion, just common sense and say, this makes sense for me to bank a 6-1, tick off the 200k account, done, job done, we move on, build up the accounts. That's it. But without the flexibility, you can't achieve that. And that's why you've probably seen in previous videos before where I talk about, I don't see much value in aiming for 2-1s and 3-1s. It depends in which scenario. Most of the time, I don't actually see too much value in that, because more often than not, you are playing a 4-hour range. It's so, and maybe this is just more system dependent. So maybe this is more focused around the way that I trade. However, it would be an example of, if I'm looking at where most of the volume is, and I'm looking for where those players step in, from point A to point B, the probability of the low being taken out is extremely high. So if I was to, let's say, get in here and get out of here, it doesn't make any sense because I'm capping the trades. It's more likely to fill 90% than it is to stop at the halfway point. So if that halfway point was a 3-1, that makes 0 sense from a statistical point of view. But again, that's my edge. That's my repeatable process. That may not be the same for you. You might not be getting into the trades for the same reasons. But this is what I'm talking about. The lowest possible time frame doesn't mean more profit, because that would be the equivalent of thinking, well, I'm going to go as low as possible and I'm going to get in as tight as possible. But you might be wicked out loads of times, and prop firm stats are very clear on that happening, where what I really like is using more weighted time frames, and there's a time and a place when to go into the lower time frames. But you have to be skilled enough. For example, this is a 4-hour entry on the break of that low. This would be a typical 4-hour. Let's have a look. I would say, to be generous, probably a 40 pip stop in this scenario. To the low, we're talking 3.6. I like to aim for a 5 to a 1 as my minimum. And then if you was to hold this for more of a medium term, you're looking at 6.8, and then to this low, 9ish to 10ish%. However, you've got more than enough room to manage the trade. Now, this would be a scenario where I go, okay, so if that's the 4-hour entry, is there a potential for playing this move? Because what I'm interested in is here to here. That's the move. I'm looking for that low to being taken out. So then what I need to look at is, does it make sense on an even lower time frame to me to be able to still capitalize on the move and be a bit more precise? Now when I go to the 1 hour, I can see that I can. So I can tighten it up. I can see the entry is roughly still the same, but rather than having my stop above here, it actually only needs to be about 28. So why is that important? Well, to that low, that changes it. Now I hit a 5.2 pretty much. So that changes the risk to reward. But I bring it back to the same thing. It's situational. Now, I've not covered the amount of entries that are actually in this run, which is ridiculous, to the point you have an entry here, entry here, entry here, entry here, entry here, entry here, entry there, average entry here, entry here, here, entry there, entry on the break, and entries down here. There are so many entries, and I'm only looking at that on the 1 hour without getting into the lower time frames. What I'm saying is, I personally haven't seen a correlation of people going into the lowest possible time frames that make more profit. If anything, I've seen the opposite to be true. The lower the time frames they go, without the true understanding of the higher time frames, they find themselves trying to scalp everything. So yes, is scalping profitable? Yeah, of course it is. Swing trading is profitable, scalping is profitable. There are loads of traders that probably scalp, and they might have even scalped for 10 years and been profitable. What I'm saying is, I don't like to use a small select group of people to describe the masses as what the average trader should be doing. I think the average trader should have a flexible system, and that you should be able to clearly define with your repeatable system, when should I hold a trade for a little bit longer, and when do I need to be in and out? And of course, some of that is going to be relevant to where are you at funding. Maybe you're trying to hit a target. There are so many reasons, but I don't want to be capped by a 2-to-1 and 3-to-1. And I also don't want to be put into a bracket of, I am this day trader scalper, because think about it. Do you really want to be doing that forever? Your responsibility, you might be 21 years old. Okay, so imagine you build your system now based off of one session, one time frame, like whatever jargon you've got. Imagine you build your system that way and you actually achieve it, which is a very small percentage of people that do. And then in 3-4 years you have kids. Then what? What about if you get married? What about if you have other responsibilities? And the only way you know how to print money is like that. What about if the market shifts and changes? There's different variables that come in, and you've only ever traded maybe one instrument, for example. What do you do then? Because I can assure you this, trading this run for us on euro dollar, this was smooth. Trading euro dollar in this run was more complex. It's still profitable, there's still entries, but you can't say it's the same as this run here. This is way more straightforward from a swing, scalp, intraday moves, higher time frame moves, being in and out, playing the ranges. There are so many ways that you could capitalize on this run, right? This particular run, this was a nice simple one on the way up as well. But what I'm saying is the market is never the same. So being able to diversify, and that's where, if you think trading more than one pair adds more risk, I don't think you fully understood risk. If anything, it's riskier for you to only know how to trade one market. But the way I see it, and I've always seen it this way, and maybe this is me being a little bit old-fashioned, but when you're trading any instrument, like, you should be able to input your system on any instrument. So if someone said to me, Mark, what do you think about, FTSE 100? Like, fine, I'll just show you the same thing. The same repeatable process will be the same. You say, Mark, what do you think of the DAX or the CAC? Or what do you think of USD SEC? Not that I would ever trade that. Or Euro NOK? Not that I would ever trade that. Or what do you think of pound dollar? What do you think of dollar CAD? What do you think of gold? I'm going to show you the same thing. Nothing is going to change. The same repeatable process. But my stance on the scalping to swing is probably, like I said, one of the most common things, and it's asked so much. But you have to ask yourself, do you scalp unconsciously from a position of greed because you think that you're going to either get to your goal quicker or make more money, because that's not reflected in the data? I think you need something dynamic, and I think you need to, whatever system you're trading, you need to apply common sense and go, in what situation does it make sense for where the market is positioned, and what situation does it make sense as to what move I should make based off of the situation itself? Hopefully that gives you some clarity. Let me know if you've enjoyed this type of video. Don't put yourself in the bracket. You got way more to do than that.